Hold up, let me tell you a story. Last year, Sunday could comfortably buy groceries and take care of his family for a whole month for 20,000 naira. But this year, things changed, and that 20,000 naira could barely buy anything again. Savings were going up around last year, there was peace of mind, and things were going well according to his plan. But this time around, it changed. Inflation went up, prices of things increased, and there was no longer peace of mind for him. Every time he checks his accounts, it feels like money is disappearing. One evening, he sat down, thinking about it, and felt like, what is the solution to the problem? Is this how life will keep going? Then things fall apart in places. He discovered something. While he was struggling to keep up, so people were earning from the same economy. Companies were paying dividend, money was growing, investments keep moving while they all slept, and money was growing during the process. That was when Today realized that there was actually a way for him out. Then he sat back and invested wisely. Today didn't just save anymore. He started investing, and the money kept growing slowly. Today's rising price no longer scared him the same way because it's not just earning, it's building wealth. Lead Capital, we can help you make sense shifts at watching your money lose value to putting it back to work. The truth is simple. If you don't build wealth, inflation will keep taking money from you. But when you invest, you give your money a chance to fight back. The question is, will you keep watching or you start growing? Start the journey today at Lead Capital. The biggest mistake new investors are making right now on the Nigerian stock market is chasing a particular stock after it had already moved or increased to a particular point. You see a stock trending, for example, GTCO, Access Corp, Dangote Cement, Lafarge Wapco, because these are like the top winners from the last week report. You decided to buy because everyone is talking about it. Not because you understand the business, but because you don't want to miss out. And what happened next? A small pullback and panic setting. You sell. Or worse, you hold without conviction. Most investors are not reacting to the headlines. They are studying fundamental companies, entering before the crowd, and holding with a clear plans. Because on the Nigerian stock market, timing without strategy is gambling. So before your next trade, ask yourself, am I investing based on value or just noise? Because in the Nigerian stock market, disciplines will always outperform emotion. Visit us on www.leadcapitalgroupng.com or download the Lead Trader app on your App Store or your Play Store to get started. Toodles. Guy, I went to the market yesterday. I almost greeted tomatoes. Good afternoon, ma. Because how did we get here? Something I used to buy for 5k is now doing premium membership. Even transportation does like a first class flight. Like it's not even funny any longer. But we just have to laugh it out in order not to cry. Wait, let me ask you something. If everything around you is increasing, why is your bank account doing like as if it's on vacation? Despite the fact that everybody is complaining that things are increasing, some people are quietly making money low-key. Why? Dividend. Yes, real money landing into their account. Congratulations, your investment just paid you. No stress, no shouting, just vibe. And yes, there are some of you that keeps refreshing your account like as if miracle is gonna happen. Listen, there's difference between money working for you and having money work for you. At Lead Capital, we help you stop chasing money but putting your money to work. Because if your money is not growing, it's doing hide and seek with your future. So instead of complaining every day, why not position yourself to benefit? Invest smart, earn slowly, and finally, let your money stop embarrassing you. Start today. Visit us at www.leadcapitalgroupng to get started. Toodles. Guy, I went to the market yesterday. I almost greeted tomatoes. Good afternoon, ma. Because how did we get here? Something I used to buy for 5k is now doing premium membership. Even transportation does like a first class flight. Like it's not even funny any longer. But we just have to laugh it out in order not to cry. Wait, let me ask you something. If everything around you is increasing, why is your bank account doing like as if it's on vacation? Despite the fact that everybody is complaining that things are increasing, some people are quietly making money low-key. Why? Dividend. Yes, real money landing into their account. Congratulations, your investment just paid you. No stress, no shouting, just vibe. And yes, there are some of you that keeps refreshing your account like as if miracle is gonna happen. Listen, there's difference between money working for you and having money work for you. At Lead Capital, we help you stop chasing money but putting your money to work. Because if your money is not growing, it's doing hide and seek with your future. So instead of complaining every day, why not position yourself to benefit? Invest smart, earn slowly, and finally, let your money stop embarrassing you. Start today. Visit us at www.leadcapitalgroupng to get started. Toodles.
Good morning, our highly esteemed lead capital clients. You're welcome to today's executive breakfast briefing. My name is Joseph. I'll be giving you insights on the equity market, and with me is my colleague who will be walking you through the fixed income market. So we're going to be looking at the review of the equities market. We look at companies' snapshot of audited earnings for the year 2025 and also investors' delight stocks for the week. We're also going to look at the weekly recommendation, dividend qualification windows, and also payment tracker. Also look at weekly expectation, and we'll look at the weekly outlook. So looking at the All-Share Index and the NGX 30, which is the 30 highly capitalized stock, looking closely on Monday, we saw an uptick followed by Tuesday. Then on Wednesday, we saw a sideways movement. And looking at Thursday, we actually had another sideways movement. Then we have a little bit of pullback on Friday, which is as a result of investors taking profit in the market. And if we look at the index so far, we actually had a weekly close, but if you look at the chart right here, you see a normal pullback that happens in the market, and we are still above the 250,000 points, which is a psychological level. And for the fact that this point is holding, it means investors are still taking position. Investors still believe in the market, and this is as a result of the Q1 that we've been seeing so far in the market. They've been a good gains so far. So all the earnings are actually renewing investors' interest in most of the stocks. And that is why we're seeing this All-Share Index closing above 250 points. So we actually expect this point to hold. And this week, we want to see an uptick from this particular figure. So looking closely, you see that the pullback actually settled at the previous resistance before we have a price discovery. And if this area hold, which is definitely going to hold because of the earnings that we've been seeing, and investors right now are actually taking position ahead of the Q2 because Q1 actually gives insight on what company is doing, and looking at earnings and revenue, you can actually predict if the Q1 of that same company is going to be positive. And because of that, we're expecting an uptick from it. And even in the banking sector, right now, investors taking position ahead of interim dividends. And let's not forget that dividends has been paid so far, and most of this money are coming back to the market. And that is why we expect this area to be sustained. So if this area is sustained, we're going to see an uptick in the market. And I just mentioned the two catalysts that will actually make us experience a bounce this week from this particular 250,330 points. So looking at the distribution of the volume so far, we all know that the financial services will always have a transaction, and they took 61% of the transaction so far in the market. And this is as a result of investors taking position ahead of interim dividends, though most of the stocks didn't perform as investors expect. And because of that, we actually witnessed some pullback in the banking stock, except the likes of GTCO and Zenith, which actually paid a mouth-watering dividends. So from the banks, expectations are high because they have to reward investors with interim dividends so that investors will have confidence in most of these banks that didn't pay dividends. And looking at the ICT sector, of course, this period will see volume going into these areas because as investors shed weight in the banking stocks, they are also going to take position in other ticker before the money will move back as we approach Q2. And looking also at the service sector, actually had 8%, and if you look at others, which amount to 17%. So looking at what we had so far for last week, we have 7.77 billion shares worth 374 billion, which was traded. And if you compare that with what was traded last week, which is 7.8 billion, and if you look at the value, which is 324 billion, we will notice that there's been a bit of jump close to 770 million, and that tells us that volume actually in the market, and investors are actually bullish about the market based on the Q1 so far that has been released and the expectation of Q2. And looking at the activities so far, the financial services industry also led with its 4.77 billion shares, which is valued at 196.35 billion, which contributes 61% and 52% in total equity volume and value, respectively. And this was also followed by the ICT sector also with a 1.12 billion shares, worth 57.83 billion. And looking at the third place, we have the service industry with a total turnover of 601 million shares, worth 6.98 billion. And looking at the top three equities that was traded last week, we have First Holdco with a large position taken by institutional investors, which actually make the ticker to move, and also looking at UBA and Charms holdings. For these also contribute 2.2 billion shares, and these are worth 99.82 billion, and thus contributed 28.24 and 26.69 to a total volume and value, respectively. Looking at the market capitalization, also we had an uptick of 2.13%, which closed for the week at 1 trillion. So looking at the sectoral performance, which is under our coverage, all ticker closed positive, except that of the oil and gas. We can look at what happened in the NGS Banking. We have an uptick of week to date 2.82%. And looking at the NGS Insurance, also 2.74%. And if you look at the consumer goods, we had 1.65%. And if you look at the NGS Industrial, we have week to date of 4.66%. So looking at our recommendation, looking at the snapshot of audited earnings for the year, we'll look at positive earnings so far. If we look at TIP, we'll look at the profit for TIP is 960 million, jumped to 3.3 billion. That amount to 250% uptick. And if we look at the earnings per share also, which witnessed 249% growth. And if we quickly look at Aradel, we'll see that the profit after tax actually moved from 259 billion and it jumped to 401 billion. That is like 54% growth in their profit after tax. And if we look at their earnings per share from 51 naira to 91 naira, that's a 78% growth. That tells you that there is a lot of money in the market and these companies are actually posting positive earnings. And that is why investors continue to invest in the market. As we encourage, if you are up in any of these tickers significantly, we advise you take your profit and consider our Investors Delight stocks. So these are the Investors Delight for the week. We have the likes of Zenith, we have the likes of Nigerian Brewery, we have the likes of Dangote Cement and GT, we have NASCOM, we have Lafarge, we have Consolidated Allmark, we have the likes of Presco and MTN. These are the stocks that you can pay attention to for this week if you've realized your profit in other ticker. So looking at our buy, sell, hold recommendation, we have PZ, we have Nestle. These are the buy recommendation. And for the hold, we have the likes of Maya, Fidelity, NACO, First Bank, Azamaza, Dangote Sugar. And for the sell recommendation, we have Fitzin, Baja, we have CAP, we have Transhotel, we have Gerigu, we have Corn Oil. So these are our buy, sell, hold recommendation. From the number of 1 to 21 is actually our buy recommendation. These are carefully selected stock. And also we have from 22 to 33 is our hold. Then we have 34, from 34 to 40 is our sell recommendation. So looking at our dividend tracker, because we want you to actually take advantage of these companies paying dividends, most especially these ones that are still open. We have the likes of Boa Foods, we have the likes of Better Glass, we have the likes of UACN, which qualification date is actually 11th of June, and the payment date is 26th of June. And the registrar is Afri Proud. So look at the ticker and see which one you're able to take part of and also get your dividends. So these are the ones that have closed. So for the week, weekly expectation for last week, the Nigerian stock market ended in positive territory for the 7th consecutive week. That's to tell you that investors are actually bullish about the market based on the earnings that have been released so far, and also backed by Q1. So the bullish sentiment was as a result of investors' continued confidence in the market and debated by overwhelming buying interest, which outweighing selling interest. So despite the profit taken by investors last week in tickers that have severally surpassed their 52-week high mark, prices continue to rise and testing new all-time highs. So we expect bullish sentiment to continue this week, given the strong market breadth index recorded throughout last week. And also, we also predict that the NGX All Share Index will close above 253,000 points, surpassing its current all-time high. And we also encourage all lead investors to download our general stock recommendation and money insight for our weekly investment. So I'll leave you in the hands of my colleague, Ojonime, which will give you insights on how to navigate the fixed income market. Thank you.
Thank you very much, Joseph, for that wonderful insight. Looking at the fixed income market, we'll be touching on what happened last week, what to expect, and most importantly, how to position your capital to maximize your returns. Over the last week, we saw significant structural movement across domestic liquidity pockets, starting with the money market. System liquidity wrapped up the week on a substantially stronger note week on week, closing at a massive 5.86 trillion naira. And this surge was primarily driven by a substantial liquidity injection from maturing OMO bills, which effectively offset the week's statutory funding and settlement obligations. This liquidity reflected in the funding rate as the open repo rate held flat at 22%, while the overnight rate compressed slightly by 9 basis points to settle at 22.24%. Moving to the NTB primary market auction that held on the 6th, the central bank came to the market intending to raise 700 billion naira across the short, mid, and long tenors. What we saw was a massive wall of demand, which was not a shock to the market, as we saw that we recorded a total subscription of 2.41 trillion naira, representing an oversubscription of about 1.71 trillion naira. More so, looking at the table, we saw that 92% of the demand was concentrated entirely on the 364-day bill. At the end, CBN allotted 731.85 billion naira, marginalizing the stop rate downward across the board to close at 15.94% on the 91-day bill, 16.14% on the 182-day bill, and 16.15% on the 364-day bill. However, if we look closely at the yield, we'll see that the 364-day bill continues to offer better returns compared to the rest, which buttressed our point that we'll continue to see aggressive demand for the longer tenors as investors look to lock in good yields for as long as possible, effectively protecting their portfolio against any future rate rollovers while taking advantage of the liquidity-rich environment. Meanwhile, at the secondary market, riding on the back of ample liquidity in the system, we saw strong buy-side demand right across the curve, forcing the average benchmark yield down by 5 basis points to close at 17.48%. Now, switching to the FGN bond secondary market, we saw a different narrative play. The bond space sustained its bearish momentum as we witnessed sell-off driven by investors looking to free up liquidity, which in turn pushed yields higher across the curve. On a structural level, yields on short date papers moved up by average of 2 basis points, while mid to long tenors advanced by an average of 1 basis point. For market turnover and the heavy trading blocks, we saw it was concentrated around 20, 29, 30s, 32s, 33s, down to the 53 maturities. On aggregate, the average benchmark yield nudged up to 18.52%. At the currency desk, we saw some signs of stabilization as at the official window, Naira appreciated slightly by 0.5352%, closing at a spot rate of 1,372 Naira and 4 kobo. While at the primary market, we saw it settle at 1,400 Naira. Looking ahead, we can see that the week will be quite eventful as first of all, we're having NTB primary auction to hold this Wednesday, where CBN is offering 650 billion Naira worth of bills. We also expect that the secondary markets will trade quietly ahead of this, with stop rates consolidating tightly around their current levels. Similarly, we are expecting the same play for the bonds market, as they should remain cautious as investors position ahead of its respective auction. We are also anticipating a marginal uptick in the funding rate driven by the system liquidity outflows that are required to settle the upcoming NTB and FGN bond auction obligations that we have for the week. Furthermore, we have our eyes up for the Monetary Policy Committee meeting holding this week, as the committee stands on the interest rate will provide the definitive direction cue for the yields for the rest of the quarter. And with that, we have come, at the end of the day, our focus remains to point out the various market shifts and translate them into direct opportunities for you to deploy your capital and realize gain. This is where our product suite comes to play. At Lead Capital, we offer a wide range of products tailored to meet your distinct objectives of every investor, from the retail to the high net worth individuals and even the institutional clients. We believe that this would provide seamless opportunities to leverage the excellent results currently available in the fixed income market. From our fixed income fund to the balance and the dollar fund, all on the mutual fund spectrum. Investing in this fund will allow you to enjoy robust capital appreciation and periodic dividend payouts. Another plus is that these funds have low risk profiles, which completely cancels out the fear of losing your capital. For clients looking to position their money but prefer a fixed structured timeline outside the mutual fund space, we have our Lead Gazelle portfolio, which is a tailored product where you can lock in your funds for stable, predictable tenors ranging from 90 days to 365 days. And for our clients significantly holding some FX liquidity, we have our Eurobond trading portfolio options, which would suit your risk appetite perfectly. All our products are fully active and designed to help you take full advantage of the current yield environment. And with this, we have come to the end of today's segment. We are open to receive your questions. You can do so by indicating with a raise of hand or using the chat box. Okay, so we have here, good morning, please. Which sector can one invest in now?
Okay, thank you. The several sectors you can invest based on our recommendations, but we would like to point you to the fact that if you're investing now, you have to look at the sectors that are really driving the Nigerian economy. So with that, we recommend investing in industrial sector. We also recommend consumer, agriculture, and then telecom and banking. So selecting tickers that are really doing well and looking at it from the valuation perspective, I think you can take a shot in some of those stocks: banking, industrial, telecom, agriculture, and then consumer. Because if you look at the consumer now, because their product is also inelastic. People are demanding for their product irrespective in the increment in the prices of those items. So to consider that and pick stocks that are form part of our top recommendation or under our top investor delight stock for the week, and then you can invest in. Okay, for the Dangote refinery, the professional parties are still working on the pricing of the transaction. Why the issuer as well has been able to also get some working with the regulator to ensure that the IPO is successful. I think last week we also saw publications from the PENCOM that the PFAs too, they have the liberty to also invest in Dangote refinery as long as they can follow the normal investment guidelines. So a strong indications that the PFA will also, and it's a wake-up call for all our investors who have not opened their CSS account. We can talk to our relations that are willing, that are interested in Dangote refinery, because it's going to be a whole lot. The PFAs, they have a lot of funds they can also invest in. So, but I'm sure the issuer is working with all the parties to ensure that now and before the July, the offer will be rolled out. Thank you.
Okay, can you explain more on the lead diesel portfolio? All right, so this is a product tailored where you can lock in your funds for stable, predictable tenors ranging from 90 days to 365 days. So we can send you our rate sheet. One thing we are confident about is that our rates for these products are highly competitive when benchmarked against standard market rates or anything you see across commercial banks. So instead of you just using normal rates across the market, we can send you, we're open to send you our rates, and we are sure that it would meet your expectation. Next question. Good morning. Can this analysis be sent to customers who attend the weekly review, as I was unable to save some of the recommendation with via screenshot, especially the table for the buy, hold, and sell? Yes, sir, we can send that to you after this call. We'll send that, it will be sent across to your email. Good morning, team. Looking at the price history of the major bank tickers, only Sterling Bank still at a single digit. What is the expectation in terms of price movement within the next 2 to 3 months?
Okay, looking at the valuation and the other key metrics, which we usually emphasize on by the time we are making our recommendation. For this week, Sterling Bank is still form part of our old recommendation. And in terms of a target price, because what is also very key to every investor before they take action is to see the performance of the companies and to see the performer. Sterling Bank is not going to pay dividends this year. So currently, we place it on our old recommendation. Our target price is around Naira 50 kobo. It may not even get to the double digits now. So that is the expectation. So except maybe probably we have seen a result that is going to serve as a driver where you see more buy interest around the company. The banking stock we have seen rally around it is because of the pricing. Investors are willing to take a position and increase their stake, and that is the way to go.
Okay, Mr. Ayola, we have noted your email and we will do well to send you our rate sheet. For Mr. Olaide, also, what's your projection on Eternal?
Eternal, currently, we are also looking at their audited result for 2025, and they also did excellently well. I think for the first time in the last 3 years, they also declared a dividend of 50 kobo, and that has been credited to all the shareholders of the company. So if you look at our recommendations, it's not part of our top investor likes us for the week, but under usual recommendation, Eternal is on the buy. And then looking at the target price, we are looking at around between 40 to 45. So that's the target price. So the current market price of the Eternal Oil still present good entry price for those who also want to invest. And looking at the industry that company is also operating, that's the oil and gas. They operate majorly in the downstream. If you look at the industry average, the earnings per share of the similar companies within that same industry, I think they have upper hands than the likes of Corn Oil, and also the likes of Oando, and also the likes of I think these are the two major oil companies that are also operating in the downstream. So for now, Eternal is a good buy for all our value clients. Take advantage of the current market price, and then by the time their Q1 and Q2 results is also out, you are likely to see uptick in the price, and that will give opportunity for those who actually want a capital gain. Thank you. Please, what is your recommendation? For this week, we are changing Access Bank. We've changed Access Bank to the old recommendation because the reason why we placed it on buy, and last week we saw we were expecting a pullback this week. Last week, it traded low. Looking at the last 3-4 weeks now, because of the declaration that the bank is not going to pay dividends based on the CBN directives. So we noticed that price was a good price for the investor to take advantage. So for this week, we place it on hold. While we look at the movement, because we also expect a pullback from the Access Bank, because nothing is really driving the markets now around the Access Bank in terms of the corporate action. So when market also witness pullback, we may change the status to the buy. But for now, it has moved in the last within the last week by over close to almost 10 to 12%.
Thank you very much. Mr. Charles, we will do well to send the ratio to you also. And we have also noted the email. Mr. Ayola, is there another app for other funds other than the one for stocks?
Yes. Okay, thank you, Mr. Ayola. We have an app. Before now, we have an applications that all our funds and all our products, you can access it through one application. But we also notify the house that we migrated, and one of the reasons why we have also done that is to ensure a seamless trading and a redemption and a subscriptions for all our value customers. We're also working with our vendor to ensure that very soon the app is going to come online in such a way that you can also use the app to do the trading and also subscribe to all our various collective investment, the mutual funds. So our plan is to ensure that we also use that same app to access all our products. So it's still the same DTrader app, but very soon we are going to integrate our mutual funds into the app so that once you log in, you can see all your products in under one app. Thank you.
Thank you very much. Any updates on Airtel IPO?
There's no any updates on Airtel IPO now. So if there's any information, we'll communicate that to the house.
Okay, with that, we have come to the end of today's segment. Thank you so much for joining us again on this call. And if you have any other questions, you can do well to reroute to our email. Do have a wonderful week ahead.